In today's session of Visual JForex, we will be continuing our algorithm development using the indicator standard deviation. I will explain to you how we can design and develop the algorithm for this indicator on the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the prior session, I had completed the setup this far where the instrument subscription has been carried out. This time around, we are working with the USD JPY as our default instrument, which is being matched with the candle instrument. Afterwards, this position amount was defined. It is set at 0. So there is going to be no trade in case there is any pending or open position on the account, and only when there is no existing order or on the open position the new trade will be taking place. That effectively means at any point in time there can be only single trade open on the account using this setup. These standard deviation blocks of the hourly candle periods have been added with the varying shift values 1 and 3 respectively. To look at the price volatility, we are also taking the help of the get historical candle. Candle period is hourly, and this one is of 4 hours. And to pinpoint the exact entry point, these 10-second candles will also be used. And these calculation expression blocks have been used to define certain values. First one gets us the difference between the last hour and the prior hour's closing and opening values. We have to calculate it differently for the buy side and for the sell side. So these two differences have been carried out accordingly. And this is the minimum value, which is set at 10 pips. And the difference between the last hour's close and the prior hour's open should be more than 10 pips. And the deviation value for the penultimate hour has been multiplied by 2, and we have set the condition that the last hour's standard deviation value should have doubled, so it should be more than double the prior hour's standard deviation value. That means the momentum is fairly strong, and this might be the time to get involved for a new trade. To place the order, we had also defined this value, which is simply the difference from the last tick bid of half the amount of the difference between the last hour's candle close and the prior hour's candle open. And on the lower side, these if blocks have been used to set the conditions. Now, for this session, we are going to focus on the sell side of the equation, and we want the sell trade to take place whenever we have the momentum on the sell side. There is a spurt in the price action on the lower side. As you can see, as you can observe from the charting, we had this sudden sharp move on the lower side, and as a result of that we have this spike in the standard deviation value also. Suppose if we had the algorithm running and all the conditions were in place, and if the standard deviation output has doubled within the interval of 2 hours, the trade would have been taken by the algorithm. The sell order would have been placed. That's how this system is going to work. We need the penultimate candle of the 4 hours to have closed in red. That is, its closing value should be lower than the opening value. Taking a bit time to load. Okay. So that will be effectively meaning the momentum has been bearish for a while, and the new jump is simply the gain of momentum. And we will be also considering whenever we have the order to be placed, we will be considering the values, the last hour's candle close and the penultimate hour candle open, and we will take half of it and place the order above from the last tick price. And as I said, the minimum difference is also going to be needed more than 10 pips. So that's how this algorithm is going to work. So we head back to the Visual JForex board. And we will have to carry out some calculations. We will have to define the selling price. For that, we will have to consider this difference and multiply it by 0.5. Okay, here it is. DHF. I think DHF has the value of 0.5. Yes, it does. So we'll take it, multiply A1 into A2 and deviation, standard side difference it is. And we add this to the last tick ask, and then we will use this to place the limit order. We will also have to define the order validity. On tick, last tick ask plus this value. So it is going to be A1 plus A2, and it is going to be defined as SE. Okay. So we have this variable in place now. Order validity, we will keep the order validity at 1.5 hours. So for that, we will take the last tick time and the new variables. So we will take 3.6 million ticks, which are the number of ticks in a 1 hour, and I will name it TT. Multiply it with a new variable with the value of 1.5, as we need the order validity to be 1.5 hours, and name will be OV. Okay, so this is going to be A1 plus A2 into AB. Okay, and we will create the variable here in this block, create command block, as we need the data type to be long. I will name it OVT, and its value will be derived from this calculation. Okay, so now the buy side is complete. In last session, I had said that we will complete it next time around. So now today we have completed it with adding of this variable. Okay, now let us set on defining the condition for the execution of the sale trade. Component, logical components. We are going to need 6 of these. The formation is going to be symmetrical, and after that trade command block will be added. So this value, the last hour standard deviation output, should be more than twice of the prior hour's standard deviation output. Here it is. First input greater than second input. After that, we will consider the price action, and we need the last 4 hour candle to have closed with losses. So candle 18's closing value will need to be below candle 18's open value. Open, close, 4 hours. First input less than second input. After that, we will consider the last hour's closing, and that should also be on the lower side compared to the opening price. So we are going to need the candle 16's candle closing value to be below its opening value. First input less than second input. And afterwards, we will have to consider the difference, which we have already calculated, between the last hour's candle close and the prior hour's opening level. This one will need to be greater than 10 pips. Okay. First input less than second input. And this time around, first input greater than second input. And once these conditions are satisfied, we can start looking for the execution point, which is going to be last hour's candle closing value. Whenever price starts to drop below that, we will be placing a pending open order, limit order. So we have to compare the candle 19 and candle 20's closing values with candle 16 candle close. Candle 19, should close lower. First input less than second input, whereas candle 20 it should have closed higher. And after this, all we need is going to be trade command block, pending open, first input greater than second input. Okay, now let me get these blocks where they belong, and afterwards we will define the input values for the trade command block. Sell execution price is as per this calculation. Default instrument remains as it is. Trade amount is going to be 0.1 million. Slippage 2 pips. Stop loss, we are going to work with a combination of 15 pips and 30 pips. And order validity, as per this calculation, 1.5 hours. Okay, so with this our algorithmic setup is fully complete, and to check whether trade flow is going through or not, we can simply color code it and check it till the very end. It is, and now all that remains is to test it on the historical data, which you can do on the JForex platform. And after historical test, you will get the idea whether it is profitable or not, and depending on that, you can take the decision whether to run it on your demo account or, for that matter, the live account. So thank you all for joining in, and you can